Hey, welcome back to the channel. My name is Alex, and in this video, I'm going to show you 3 overlooked breadth indicators that are flashing red right now in the market. After that, we're going to go over some major markets. We're going to look at Bitcoin, the S&P 500, gold, and the NASDAQ. If that's what you're into, stick around. All right, so before we get into those 3 breadth indicators, let's take a look at the market. And what you're looking at here is the IWV, the Russell 3000 index, and it's the broadest index in the market. And what you can see here is I have overlaid my market cycles on top of the chart, whether green, orange, red, or yellow. So currently we are in a green cycle and we are on day 7 and we've moved 1.81%. And on average, the green cycle goes about 12.6 days and moves about 3.78%. And during this green cycle, we've only had 2 distribution days, and green cycles end when we get to 4 distribution days. Now let's go look at 3 market internals that are overlooked by most investors that could lead us to a decline. So the first market internal that's typically overlooked is stage analysis. Now what you see here is the 4 stages. I have stage 1, which is stocks that are going sideways after a downtrend. Stage 2, which are stocks in uptrends. Stage 3, which is stocks that are going sideways after an uptrend. And stage 4, which are stocks in a downtrend. And as you can see here, 56% of stocks are currently in an uptrend. And that, when markets are at all time highs, is very, very low. So typically we like to see that number over 65 whenever we're making new highs. So it's showing the underlying weakness underneath the market. The second indicator that's overlooked is the 10-day trend. Now, as you can see here, the 10-day trend has been positive over 1 for the last, 10-ish cycles or 10-ish days. And typically, throughout this entire bull run from the lows of April, the trend has been below 1. And now, what is the trend? The trend is basically a calculation that takes the average volume going into the bids and the average volume going into the asks. And typically, when people are hitting the bids, or selling the bids, right? That means that big players are trying to sell into any strength. So it being over 1 for this period of time is signaling increasing weakness. Also, as you can see here, the VIX is at 15, which signals complacency. I mean, the market is very silent. That typically leads to bullish environments, but the correlation is starting to tick up. And what is the correlation? The correlation index takes about the top 50 stocks in the S&P 500 and their options, and whether they're going to trade in line with each other. And so when correlations are very low, that means the market's going to move, or those 50 stocks are going to move independent of each other and independent of the market, which is bullish. But when we start to see the correlation tick up with the VIX staying the same, that's a little divergence that could lead to weakness. So the third overlooked breadth indicator is actually a group of breadth indicators that I've taken from my market monitor. But essentially, it's the number of stocks that are above their 45-day Bollinger Bands, the number of stocks that are in short-term uptrends, and the TD sell indicator. Now, the number of stocks above their 45-day Bollinger Bands, that goes without saying. If you put on a Bollinger Band onto a chart, you'll see stocks that are above 2 standard deviations above a certain moving average. They're above the Bollinger Band. And when this number hit 334 and now it's starting to decline, that is a sell signal. Now, moving onwards, the short-term momentum up, as seen here by this STMU, that is the number of stocks where their 5-day moving average is moving above their 20-day moving average. And as you can see, we peaked at about 255 2 days ago, and now it's down at 194. That is another sell signal that we are losing momentum in the market. And the last one is TD sell. And the TD sell indicator takes the closing price of the stock and the closing price 4 days ago, and whether or not that has happened 9 days in a row. So we have 413 stocks that are their close today is above their close of 4 days ago, 9 days in a row. And typically, when we see this, above 400 or into the 600s or even thousands, that's an overbought condition leading to weakness. Now, what I also like to do is I like to confirm these breadth metrics with some technical analysis of the major markets. And the first market we're going to analyze is Bitcoin. All right. So what you're looking at here is ticker symbol IBIT. This is the Bitcoin ETF by BlackRock. And we've drawn some lines in here from previous videos. As you can see here, this is the blue line is our kind of line in the sand of bullishness for Bitcoin. If it gets below this point of control candle, we would be turning, less bullish on Bitcoin. It needs to stay above there in order to stay bullish. But also, it's formed a sort of a flag range here, and we've outlined it here with these areas on the upside and on the downside. And yeah, I mean, I could just go through the Wyckoff story, which is the kind of technical analysis we do on the channel. So we've had our buying climax and our reaction here, and we've had a series of tests which create the trading range. And now inside of here, we've had a spring, right, where we've undercut the lows of the first initial reaction, right? And then we move to the high of the range. And then on this candle here, we had an upthrust um, where the stock or the Bitcoin moves above the range and then comes back in. So let's just analyze it. Let's analyze the difference between the upthrust strength and the spring strength. So what I'm seeing here is essentially this upthrust is much stronger than this spring. They did buy this dip, but this amount of volume coming into this spring was only able to produce, a small gain. Whereas, up here when we had this upthrust, it was like that small amount of volume was able to produce this, big upthrust. Okay. And essentially an upthrust, I think I said it before, is just when you break out of a range and then come back in. And a spring is when you break out of a range and come back in. Okay. So we had this upthrust and very strong one. You typically see it go to the bottom of the range, which is we've seen. But it wasn't that strong. The follow through wasn't that strong. Now it did follow through, and it's kind of bouncing here at the bottom end of the range, but it wasn't that strong. So it's kind of just range bound, and it's very choppy. This looks like classic kind of phase B ish action here. So maybe we just need this quarterly moving average to catch up. And that's all I would say on Bitcoin. That it just needs to go sideways a little bit more, and it's just stuck in a range. So let's move on to gold. Now, gold is kind of the same thing. Pretty much looks like Bitcoin, just maybe right over here. But as we can see here, we drew this range on gold, and yeah, it's just been trading sideways. The quarterly moving average caught up, got inside the range, and it tried to bounce after the quarterly moving average caught up, and it got rejected, and then it did a spring, and then boom, and now we are just kind of hanging out here. It doesn't look so good actually in gold. It looks pretty weak. I mean, ideally on previous videos, I was saying that, maybe it needs to have a big kind of undercut here of this range here and then spring because gold's just had a monster move here. I wouldn't be surprised if it just needs much more time. And judging by this action right here, and it's below, this is the anchored VWAP from the Fed day. It's looking like gold wants to continue lower. So that would be my TA on gold. Let's move on to the S&P 500. So here's the S&P 500 as of intraday Monday. It just looks strong. I mean, we had those breadth metrics that I talked about that are showing weakness, but the weakness isn't showing up in the chart yet on the S&P 500. We're still above the anchored VWAP from the Fed day, and we would just need some sort of a catalyst to push this thing down. But we do have a lot of divergences happening, making new highs with what we call in Wyckoff is shortening of the thrust, right? So if I were to draw a wave here, a wave here, and then a wave here, this kind of looks like climactic uh, wave that's kind of shortening, okay, as compared to this wave, and then of course as compared to this wave, right? So that's kind of what I'm looking at, and yeah, I mean, I wouldn't be surprised if we have maybe sometime this week like a large bodied candle that goes down and we test lower because it's looking a little bit tired. And with those breadth metrics that we talked about at the beginning of the video, they're obviously selling the bid here slowly, and it's just showing like it's just tired. So that's what it looks like there. So moving onwards to our last index is QQQ. So I made the case that the QQQ, it's not going to break out of this little channel that we have here, and it should break down. It's looking a little bit weaker than the S&P 500, which is another indicator that, I mean, QQQ has been the leading index. And if you compare QQQ to SPY, QQQ, at least yesterday, was showing a little bit more weakness here. If I just go back and forth, right? Okay. Um, so that is another leading indicator that the Qs are starting to pull back before the S&P 500, and the Qs typically lead to the downside. So, I mean, they bought the dip here, moving up higher, nothing really to say. I mean, it kind of it's been in an uptrend, sort of a climactic run here towards the end after this kind of shortening of the thrust wave before. So I mean, the Qs just look like it's tired and it needs to come down. And with that, that's the Monday market update. I hope you guys enjoyed it and have a great week. I'll see you on the swing trading watch list on Wednesday. Cheers.